What is the criteria which is used or should be used to determine what interest rate a person should get?
Depends on their credit worthiness. Their credit worthiness and their credit history and credit score basically determines the interest rate.
How does one build a good credit record?
Pay your account on time. Pay your account in full.
What is a healthy debt to income ratio?
If your debt to income ratio is above 40%, you should start getting worried, and you should try to rein it in.
Welcome back to Palatable Politics, a show where we take the complexity out of politics and make it palatable for you. With me, your host, TJ Maslela. Welcome to the show. In today's session, we're going to be discussing credit, the National Credit Regulator, and the role they play, including the Act. Here to give us insight and educate us on it is none other than Mr. Jimmy Golele, who is the Senior Education and Communications Officer at the National Credit Regulator. Mr. Golele, welcome to the show.
Thank you, and thanks for hosting us.
Thanks. So, can you give us a bit of insight into who you are, your journey, what you do, and why you took interest in the National Credit Regulator?
An educator by profession.
Okay.
And ended up leaving the formal education space and joining the Department of Economic Development some years back. And I eventually ended up in the National Credit Regulator. Before the National Credit Regulator, I was in the consumer protection space in the Department of Economic Development. I was a consumer complaints officer. So consumers would lodge complaints with our office, and we would try and mediate, find solutions between them and the service providers, or including credit providers. Back then, I then crossed the floor to the National Credit Regulator, mainly because I thought it will give me national exposure. Because in the previous job, it was at the provincial level, so I was confined to Limpopo.
Okay.
And I thought the National Credit Regulator will give me national exposure, as well as also the fact that they focus on a specific item, being credit. With the provincial office, you are a jack of all trades, or you are a GP if it was the medical space. Okay. So with the National Credit Regulator, the focus is specifically on credit-related matters. So hence, I ended up at the National Credit Regulator. I regard myself as an activist in the consumer protection space. I'm passionate about issues of consumer protection, although my role is from an educational point of view. I create awareness, conduct workshops, have talks, do radio interviews on topics that will hopefully inform consumers and put them in a position where they can make informed decisions when transacting in the credit space.
Okay. Now, the National Credit Regulator, how did it come about? What are they trying to achieve in terms of what are their objectives?
The National Credit Regulator is established in terms of the National Credit Act. It was established to regulate the credit industry. Before we had the National Credit Regulator, we had an institution which was called the Microfinance Regulatory Authority. And then around 2005, 2006, then the National Credit Act came into being, and it established the National Credit Regulator as you know it today. And it is intended to regulate the credit industry. And in regulating the credit industry, there is a number of activities that the regulator performs, including educating consumers about their rights and responsibilities. We also research the credit industry, and out of that research, we are able to inform government or share insights with government, so that when they develop policies and legislation, they take that into consideration. We also have to ensure that the registrants of the National Credit Regulator, that is the credit industry participants, follow the provisions of the National Credit Act. So we have an investigation department that looks into that. We have compliance departments that look into whether these registrants are complying with the provisions of the National Credit Act. And then where complaints have been lodged by consumers, our investigation department looks into that. And then we do both reactive and proactive investigations and compliance checks to all our registrants.
Okay. The National Credit Act. What was happening for one to say, for the state government to say, actually, this is what's required, and what was the issue that they were trying to deal?
I think what was happening before, we had two acts that were regulating the credit space, the Usual Act and the Credit Agreement Act. However, these acts were fragmented, and with the history that we have as South Africa, there were issues that had to be looked at, that had to be sorted out. For instance, the National Credit Act seeks to make access to credit to be non-discriminatory. Every individual in South Africa who qualifies for credit should be given credit irrespective of where they come from, irrespective of their color of their skin, irrespective of whether they live in a rural or urban setting. They should be given equal access to credit, provided they will afford repaying that kind of credit. So that is some of the elements which the National Credit Act sought to take care of, which were missing in the legislations that were there prior to the coming into being of the National Credit Act.
You touched on the discrimination in terms of determining the interest rate people get. We've seen, I'm not going to mention the banks, but banks being implicated or being alleged, accused of charging blacks different interest rates from whites or any other race. One, is there any truth to this? Two, what does the NCR do about this?
Let me say we have also observed and seen those allegations in the media space. And then at this stage, we have not come to a decision as to whether these allegations carry any truth or not. The NCR is currently carrying out compliance checks to verify whether these allegations are truthful or not. So at this stage, it's rather a bit early to say much about these allegations. Safe to say we are doing compliance checks to check.
Let's say it comes out that they're guilty, they were doing it, charging blacks more. What would be the implication of that?
The implication of, should it come to light that indeed there was discriminatory lending, the matter will be handed to the National Consumer Tribunal. We have an entity called the National Consumer Tribunal, which is established in terms of the National Credit Act as well. It is basically our court. It is the one that would adjudicate over matters where there was flouting of the legislation. So if indeed it comes to light that some banks were charging one race more than another race, then that matter will be adjudicated or will be adjudicated by the National Consumer Tribunal. They are the ones that will come with a way forward regarding such allegations.
What punishment would it look like? A fine on revenue? Would it look like imprisonment? Would it look like loss of license?
The National Consumer Tribunal has a number of punitive measures that they can put in place. One, it could be a fine determined by them. It could be suspension. It could be deregistration. It could be expecting the guilty party to perhaps repay the victims of their shenanigans. So it could be it could go either way. It could go in a number of ways. It can only be determined by the NCT, unfortunately.
Okay. Now, fine, we've spoken about what banks shouldn't do. What is the criteria which is used or should be used to determine what interest rate a person should get?
The criteria that determines what a consumer can be charged in terms of interest rate, in the main, depends on their credit worthiness. When a consumer approaches a lender to make an application for credit, The credit provider is expected to conduct what we call an affordability assessment. What they also have to look into their credit history and then make a determination as to whether that consumer can be given credit or not. And their creditworthiness and their credit history and credit score basically determines the interest rate which the consumer will end up being charged. With that said, let me indicate as well that we encourage consumers to, as much as possible, to have good credit records and good credit scores, because the better your credit score, the better your credit report. Therefore, you are deemed to be a less risky consumer. Therefore, you get given preferential interest rates. However, if your credit history, your credit score is a bit dodgy, a bit shaky, then credit providers look at you as a high-risk consumer. And if you are a high-risk consumer, unfortunately, you get charged high interest rate. And while it seems rather contradictory to say
Punishing
the consumer who is
having money.
struggling gets punished with high interest rates, that's unfortunately how things are in South Africa and probably in many other jurisdictions across the world.
Okay. Yeah, no, that is unfortunate because, like you're saying, people who don't have money get punished for having money, and those that have money benefit.
Get rewarded for.
Yeah. But now, how does one build a good credit record?
To build a credit record, a consumer needs to do a number of things. One, pay your account on time. Pay your account in full. And also diversify the types of credit that you're having. Have a healthy balance between secured credit and unsecured credit. Those elements will help one build a good credit score. And as well, one must watch their debt to income ratio. If you are over indebted, you look like you will fall by the wayside anytime. It is likely to affect your creditworthiness and how credit providers would view you when you make an application for credit. So it is always good to make sure one has a healthy income to debt ratio. It helps one build a good credit score.
What is a healthy debt to income ratio? 50%, 20%, 80%?
Most economists would put it that if your debt to income ratio is above 40%, you should start getting worried, and you should try to rein it in. But unfortunately, for the majority of consumers in South Africa, most economists indicate that we hovering between 70 and 75%. We spend 70 to 75% of our incomes servicing debt, which is an unhealthy debt to income ratio. Meaning the majority of consumers in South Africa need to relook at their finances, need to go back to the drawing board and see if they can take this down.
Okay. But I mean, in a case like that, no? Let's say I get paid whatever I get paid, and I say, hey, I want a car, interest rate is 10%, I can afford this, I'm within 50%. And then that guy at SARB there goes and plays with the interest rate and increases it. Now I can no longer afford. What am I supposed to do? Or I can see that, hey, the cliff is there, I'm close to it. What should I do?
We normally encourage consumers to say, even at the time when you can afford a certain line of credit that you are applying for. Say, for instance, you need a car like we indicated, or you need a house, and you approach a bank and they tell you qualify to buy a house of 2 million rands. It would be in your best interest not to buy for 2 million. Okay. You need to leave a room for change in circumstances. So if you were to buy a house, say 1.5 million, should there be a change in interest rates, there is still room for you to maneuver, and then you can still survive. However, if you have jumped in with both your feet and taken the 2 million, you will probably have to revisit your budget, see where you can reprioritize, cut back on some things so that you can patch on other areas where there is a shortfall.
But I mean, can you blame a consumer that if I go and find out, hey, how much can I afford? And you tell me I can afford 2 million.
we do not necessarily blame a consumer, but we say leave a room for change in circumstances. There could be a number of things that could send the situation south. It could be we had COVID, we have interest rates going up and down. Life events happen. Maybe at the time you bought this house or car, you were sharing expenses with your partner, but for whatever reason, you decide to part ways. Now you are on your own and you must take care of everything. So hence we say always leave room for change in circumstances. Or it could be another scenario whereby maybe you lose a sibling and whose dependents become dependent on you. Now you have extra expenses. It has nothing to do with the taxman, with the Reserve Bank having increased the interest rates or so. It's just life's events that have happened and that are affecting your pocket.
Okay. So now when one goes to the bank and they say, okay, yeah, we can give you the 2 million, what are the questions I should be asking? What are the things I should be looking for?
The things that you should be looking for, amongst others, would include before you even go and apply for the loan or credit agreement, you should ask yourself, are you going to take this loan to acquire assets or liabilities? Ideally, we encourage the usage of credit to acquire assets. Secondly, ask yourself, will I afford this loan or this credit that I'm applying for? So that you can then also factor what I said a few seconds ago, that should something happen, will I be in a position to continue servicing this loan? Another important consideration would be, do I need this loan now, or can I defer this and actually save for this particular item? Because there would be other items that people ordinarily buy on credit, but which they would buy in other ways. Say, for instance, you feel like changing your television set. You need the plasma. You're tired of the hatchback. You can either buy it on credit, or you can choose to save and buy it cash, or you can lay by and buy it and pay for it over time while it is still in the hands of the service provider or seller. And then when you have paid everything, then you can go collect your TV. So depending on what you're buying, you will ask yourself different questions. And then, but it is usually very important to ask yourself questions before you go and apply for credit, not just jump in and take whatever credit that is offered to you as a consumer.
And the people that supply credit, can we touch those? We know of banks, retailers, and machinists. What's the story there? What's the regulation? What is allowed? What isn't allowed? Processes, etc.
Credit providers, as you indicated, would include banks, furniture shops, retail shops, micro lenders, well popularly known as machinistas. All of them are expected to register to operate in the space. They are expected to register with the National Credit Regulator, have a credit provider number. Before 2014, Abo Mashonisa were not necessarily all expected to register with the National Credit Regulator. If you were a smaller Mashonisa who would meet a certain criteria, you would be allowed to operate without registering. However, the Act was amended, and then with the amendments, every credit provider, as long as you are borrowing money or lending money to consumers, you are expected to register with the National Credit Regulator. And there are certain expectations in terms of your operations. For instance, I indicated earlier on that before you give credit to a consumer, you are expected to do an affordability assessment to ensure that you are not giving credit to a consumer who will not afford repaying that credit. You are not expected to do certain things that we see some credit providers, particularly the unregistered ones, doing, like retaining instruments belonging to consumers, which would include, amongst others, ID cards, bank cards, SASSA cards. That is prohibited in terms of the National Credit Act. Credit providers are not allowed to retain ID cards, bank cards, as a means of ensuring that the consumers will pay the loans that they have taken. It's sad to note that some consumers will probably not vote on the 29th of May because their ID cards are in the hands of some credit providers.
What should they do if they want to vote? But
if they want to vote, they
ID.
can either
Pay
go
back
to the credit providers, ask for their documents, or they can report such behavior to either the National Credit Regulator or to the South African Police Services.
Now, you said that it's on the credit provider to provide or to do an affordability assessment. How do I do one on myself at home?
As a consumer?
Yeah.
Yeah, as a consumer, to do an affordability assessment, it will start with your budget. After you have done your budget, you can then see how much gets left. If there is any surplus from your income that you can then use to go into some kind of credit agreement. Say you want to buy a car, and then you do your budget, and then you realize that when you have satisfied all your debt requirements and day-to-day expenses, you are only left with 1,200. It wouldn't be advisable for you to even be thinking of buying a car because one, it won't cover the installment. And after buying a car, it doesn't end with the installment. You need to service the car. You need to have fuel for the car.
Yes.
You need to have tires. You need to have money for insurance. So you look into your income versus your expenses and whatever else is left. And then considering what car you were looking for. So you can actually tell before you even go out to the credit providers that whether you qualify to get a car or not, or whether you qualify to get a bond or not, or whatever type of credit you may be looking for.
Okay. Now, the second component of it, interest. What's the range? So we know that we have the repo rate, we have the prime. What's the range between what I know, okay, 20% is too much, it should be 5, it should be 15. Is that regulated?
Interest rate is regulated by the National Credit Regulator, but set by the South African Reserve Bank. We sometimes get a lot of flack saying, why do you allow credit providers to charge us so much interest? Unfortunately, as the National Credit Regulator, we don't set the interest rate. Our role is to ensure that credit providers, when they charge interest, they charge in line with what is the prevailing interest rate at the time. So the Reserve Bank will set the interest rate, and then we will just go out and monitor to ensure that as and when we are given credit providers are following the interest that is allowed. Consumers should just be aware that different credit lines have different interest that can be charged. For example, your mortgage bond has its own maximum that can be charged. Your car finance has its own interest that can be charged. Credit card, personal loan, short-term loan, all these different lines of credit have different amounts that can be charged by credit providers.
Where can we get this information as to what the cap is for each?
This information is available on our website and should be checked regularly because, as you indicated earlier on, the South African Reserve Bank makes these announcements almost every 3 months. So interest rate caps change from time to time depending on whether they hiked, lowered, or kept the same. So, but that information remains available on our website all the time. So consumers can visit www.ncr.org.za and they can find that kind of information.
Okay, no, thanks. Now, on a personal note, which is what led to the thought of having this podcast. So there was a time I had levies for the state where I stay, and I just put off paying it, forgetting, and eventually I did make the payment, but I made like on the 8th, and due date was on the 1st. I'm not going to mention the company, etc. But now there was a debtors file or creditors file, whatever it was, opened, and I was like, but fine, I mean, I understand I'm late, but at what point is it that one should be charged?
All right. In your case, you were late not on a credit agreement.
Okay.
Because if you are saying it was levies do not necessarily fall under credit agreement.
Okay.
They only become incidental credit once your account falls in arrears. And then if they are charging you incidental credit, it shouldn't be more than 2%, if my recollection is correct. However, if it was a credit agreement, if it was the case of a credit agreement, say you had a store card with one of the retail shops and you did not service your account, then in terms of the National Credit Act, your account has to be 20 days in arrears for you to be in default. And once you are in default, even before they take any action, they need to inform you that your account is in arrears or in default, and we give you so many business days to bring it up to date, or else we will take action against you.
Okay. So credit would be constituted or defined as whether you've bought something or a cell phone contract or a Virgin Active thingy. Do those constitute credit, or are those?
Those are not credit agreements as well. Your gym contracts, your cell phone contracts are not credit agreements. They are service agreements.
Okay.
And unfortunately, they fall outside the scope of the National Credit Act. However, not all is lost, because there is an act that takes care of what should happen in that space, and that is the Consumer Protection Act, which is administered by either the National Consumer Commission or the various provincial consumer affairs offices.
So basically your clothes and stuff, your furniture, that's the debt you're talking about?
Yes, those constitute a credit agreement. Yes.
Okay. At what point does prescription of debt apply?
A very interesting question, because there is a lot of misinformation out there about prescription of debt. And the irony is that Venek will say, skoloto asiboli, kumbe xikweleti a xi boli, but then English will say debt prescribes. But it's important for consumers to understand that certain conditions have to be met for debt to prescribe. When I'm out there conducting workshops, I get a feeling people feel just the passage of time would lead to debt prescribing.
Yeah, like changing numbers.
Yeah, after 5 years, my debt will prescribe, or after whatever period of time, my debt will prescribe. And that is not the case. There is a prescription act, which must be read with the National Credit Act in terms of trying to understand the prescription. But then these would be the criteria. Say, for example, I have an account with a clothing store, and I stop paying for that account. And for a period of 36 months, 3 years, I do not pay. I do not make any promise to pay. And the credit provider, observing that I'm not paying, they also keep quiet. No SMS, no call, no email, nothing. There is no communication. And they don't take the matter to court. Then after 36 months, that debt prescribes.
Okay.
They can no longer come after me for it.
Okay. The National Credit Act, there was amendments to it, which cited, which made provision for debts to be written off for people that can't afford. Can you walk us through what that amendment was?
There was an amendment, I think, and that was the second amendment.
Yeah, the one the president signed into.
Yes, and then there was a first amendment in 2014, but the one that you are referring to, I think it was in 2019. The intention of the amendment was to assist consumers who are over-indebted, struggling, and mostly out of work. A criteria has been set that the debts shouldn't exceed 50,000, and the consumer has to be within a certain bracket in terms of income. I think it was 6,000.
Okay.
So should that consumer find themselves struggling to meet their obligation because they are out of work, then it doesn't start with just the outright cancellation. It starts with them contacting the National Credit Regulator, informing them of their position, and the regulator contacting the credit provider and indicating the circumstances or situation of the consumer. And then if after a period of 12 months the situation hasn't improved, then the National Credit Regulator will then inform the credit provider again that the situation still remains the same, So please apply your brakes in terms of hounding the consumer. And then, should the situation change, for example, you become lucky, you get a job, then you will be expected to meet your obligation to the credit provider. However, if 12 months lapses and still there is nothing, then the National Credit Regulator would negotiate with the credit provider to consider writing that debt off. However, this has not been implemented as yet. The amendments have been signed, but then we are awaiting the presidency to give the go-ahead to implement such amendments.
Okay. No, thank you for that insight. Guys, thank you for tuning in. I hope that you learned. Let's be financially responsible, right?
Certainly.
Okay, all right. And don't forget, 29th May, come out, vote, make your mark. In between there, like, subscribe, share, and tune in same place, same time next week. Thank you for coming through.
Thank you for affording us the space to interact with the audience.
Yes, same place, same time next week.